This is the video for Chapter 4 homework. So we have 1, 2, 3, 4, 14, and 10 to do. Imagine 1, 2, 3, and 4 are all maybe related. I can never get to them. You know what? Let me do this. Okay, that's better. I downloaded it and opened it up, so it's its own separate thing now. Alright, so Dalton Hairstylists Adjusted Trial Balance follows. Prepare Dalton's income statement for the year ended December 31st, 2018. Alright, so regular journal entries have been made and posted. Adjusting journal entries, which was Chapter 3, have been made and posted. And now this is the adjusted trial balance. And basically 1, 2, 3, and 4. 1 is to prepare everything. An income statement, a statement of retained earnings, an unclassified balance sheet, which is what we were doing in Chapter 3. I don't remember what chapter reclassifying meant. And then a classified balance sheet. Oh my goodness, sorry. All right, so income statement first. So we're going to have the title, Dalton Hairstylists, income statement, and it's for the year ended. Hopefully you've already watched the lecture videos for Chapter 4. All right, so the income statement is revenue and expenses. So we're going to use these bottom accounts here, these revenue and expense accounts. All right, so service revenue. Is $13,800. And we're going to have our expenses. Rent expense. Supplies expense. And sorry, I tend to type everything out first and then put the numbers in. That's just how I do it. Depreciation expense. And interest expense. Okay, so $3,900 for rent, $850 for supplies, $2,200 for depreciation, $23 for interest. And then we need to sum those up. Don't forget to put your titles. This is our total expenses. We need to draw a couple of lines. And then the revenue minus the expenses, and that is our net income. And then you can make them all dollars. I don't really care. You can just do commas if you like. I just tend to make them all dollars. All right, and then you can also do the merge and center on the title. On the test, I'm not as concerned about that. I'm more concerned with your numbers. But if you have time to make it look nice, that is always a good thing. Go ahead and merge and center that one. All right, next up we need to do the statement of retained earnings. So it's basically the same heading, so I'm just going to copy this and then change this to statement of retained earnings. All right, so we start off with retained earnings. At the beginning of the year, which would have been January 1st, and they were I don't see it on here, so it must be their first year of operations. So if it's their very first year of operations, they don't have any retained earnings yet. So that would be 0. All right, to that I'm going to add net income, the 4550 that we just did. I'm going to have a subtotal, and then you subtract dividends. Dividends were $1,400. And that's retained earnings December 31st. All right, so remember this net income, this came from this. All right, that went up there. All right, then we have the balance sheet. I'm going to go ahead and copy the heading again, even though it's going to change a little bit, but that's okay. At least I don't have to recenter everything. So this is going to be a balance sheet. And this one, the first one is the unclassified. You don't have to put unclassified in the title. I'm just doing it so you know which one it is. And then the date line is just the date. Oh, I'm probably still going to have to. Okay, so we have assets first. It wants it in a, this first one is an account form. All right, so this one that we're doing right here, this is S43. So it's unclassified in account form, which means that it looks kind of like the accounting equation. So assets are on one side and liabilities and equity are on the other. That's what you've pretty much been doing all along. All right, so our assets, we always start with cash. So we have cash, account receivable, office supplies, equipment, and accumulated depreciation on the equipment. And I'm going to go ahead and widen this out. So I've got $1,300 for cash, $1,500, $1,800, and I'm going to move in a column and do the $20,900 for equipment minus the accumulated $2,200. All right, and that's it for my assets. All right, then liabilities and equity are going to go over here. Liabilities go first. I have account payable, interest payable, and notes payable. And once again, I'm going to widen this out a little bit. Okay, so accounts payable, $400, $500, and $3,100. Then I'm going to sum those. And there's my total liabilities. All right, now I'm going to have equity. I have common stock of 16,150, and then retained earnings, and it's this 3150. This is my new retained earnings that I need to use. add those up. That's my total equity. Add up the liabilities plus the equity. And that's total liabilities and equity. I'm actually going to make this big. Now I'm just formatting it to look like I want it to look. All right, but I do need to total my assets out because I need to make sure my assets and my liabilities equal each other. And I didn't total them out a minute ago because I like them to be on the same line. And I didn't know where that was going to be. All right, so 23.3. Hallelujah, we're good. I can finish adding my lines. And then this is total assets. All right, and then if you want to take the time to make this better, you certainly can. I don't really take off for formatting. I more look to see that you completed the work. But it's good practice. Okay, then S4-4 was basically the same thing, except that it's just classified. So you're going to have all the same numbers. You're just going to categorize them a little differently. I'm going to go ahead and copy that, so I don't have to write it again. Okay, also, it's the report form. So we're going to do assets on the top and liabilities and equity on the bottom. So it's going to be just formatted a little bit differently, but same numbers and everything. So we're going to have assets. And then since it's classified, let's change that up here to classified. We're going to start with current assets. So our current assets in this case are the cash, account receivable, and office supplies. $1,300, $1,500, and $1,800. All right, and then sum them up. And don't forget your title, total current assets. All right, then I'm going to have plant and equipment. And it's these two. And I'm just going to copy it. You can do that too. You don't necessarily need to retype the whole thing. Except I'm going to move it over a column because I want it to line up. Alright, and then it's just the two added together, plant and equipment plus the current assets. And there are my total assets. Oh, well, oh, sorry. Alright, then I'm going to have liabilities and equity down below. Liabilities go first. I'm going to have current liabilities. Alright, our current liabilities are the accounts payable and the interest payable. The note payable, they told us in the question, is long term. I'm actually going to leave that there. So I need to add these two up. This is my total current liabilities. Then I have long-term. And since we only have the note payable, I'm not going to drag it down. You can if you want to. I'm just not. Alright, so it was 3,100. And these two add up. And And that is our total liabilities. Then I have equity. And actually, the equity section is the same. All right, so it's just going to copy that. But I'm moving these two over. And then liabilities plus equity. Liabilities plus equity. Try that again. There we go. And that's our total liabilities and equity. Alright, and then you just need to make it look pretty again. And I mean, you can redo this if you want. Since it got smaller, you have to take it back to the side. What do you have to do? You have to unmerge. There you go. Yep. You have to unmerge. And then you have to do it again. No border. Okay, so that's 1, 2, 3, and 4. This is number 2. You have to do these on the exams. I would practice this. I would do it in Excel, use the formulas, and then copy and paste it over to Blackboard when you get to that point. All right, so that was 1, 2, 3, and 4. So now we need to do 10 and 14. All right, 10. Okay, so we need closing entries. I'll come down here a little bit. All right, Brett Teddy Enterprises had the following accounts and normal balances listed on its December 31st adjusted trial balance. And we're to journalize the closing entries. Okay, so because I know you watch the lectures, I know that you know that there are 4 basic closing entries. All right, the first one is to close revenue to income summary. All right, so revenue was $21,900. Revenue has a credit balance, so if I need to zero it out, I have to debit. So I'm going to debit service revenue. I'm going to transfer its balance to income summary for $21,900. All right, the second entry the second entry is to close expenses to income summary. All right, expenses normally have a debit balance, so to close them, I'm going to have to credit the expenses and debit income summary. All right, I don't know the amount yet for income summary. So now I'm doing the credit to the expenses. You have to do each one individually. You have to list them, I should say. You can't just do one big number. So salaries expense, rent expense, advertising expense. Okay, that's it for the expenses. So $6,000, rent was $4,400, and advertising is $3,100. All right, so back to the debit for income summary. You need to sum these up. All right, then the third entry is to close income summary to retained earnings. All right, basically you're rolling net income into the retained earnings. All right, at the moment, income summary has your net income in it. So you need to see how much you have in income summary. I didn't need that many rows, but that's okay. All right, so after my first entry, income summary has a credit of $21,900. And in the second entry, it had a debit of $13,500. So then you find the balance at that point. My credit is more than my debit. So I'm going to do my credit minus my debit. And I have a balance of $8,400. All right, since the credit or the revenue is higher, that is net income. All right, it has a credit balance, so I have to debit income summary to zero it out, and I'm going to credit retained earnings. And it makes sense that I'm crediting retained earnings because I had net income. If I have net income, retained earnings goes up. And retained earnings is an element of equity. It has a credit balance, so I increase it with the credit. All right, and then the final entry is to close dividends to retained earnings. All right, dividends have a debit balance, so to close them, I have to credit, and I'm going to transfer it to retained earnings by debiting retained earnings. Dividends decrease retained earnings. Retained earnings is an element of equity. Equity normally has a credit balance, so if I want to decrease it, I have to debit the retained earnings. All right, dividends were $6,900. All right, that's it for the closing entries. All right, and then finally, the current ratio. All right, you'll use this actually a lot in many of your classes throughout college, many of your business classes. This is number 14. So the current ratio equals current assets divided by current liabilities. So basically, the exercise here is being able to identify what current assets are and what current liabilities are, because not all these accounts are current assets and current liabilities. Some of them are other things. All right, so basically, we're going to have prepaid rent. Prepaid rent is a current asset. Office supplies is a current asset. Accounts receivable is a current asset. Cash is a current asset. And that's it for the current assets. And those are going to be divided by our current liabilities, which are, let's see, notes payable is long term, prepaid rent is a current asset, salaries payable is a current liability, accounts payable is a current liability, and I think that's it. So I guess I'll just type the numbers in. Let's see, prepaid rent, $2,500 plus $1,300 plus $6,600 plus $3,500 divided by $2,600 plus $3,600. All right, so that equals 2.24. And you just leave it as a number. Okay, it just stays like that. And that equals our current ratio. All right, and then B wanted to know how much in current assets does end-of-the-line Montana Refrigeration have for every dollar of current liabilities it owes. It has basically $2.24 of current assets for every dollar of current liability owed. All right, that's it for chapter 14. For chapter 4.